Time now for Market Movers from CME Group.
Welcome to Market Movers. This is Jim Uriel, and we are just days away from one of the most important economic releases of the month, the January Unemployment Report, also known as non-farm payroll. Joining me as always is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Scott, Donald Trump is the new president.
You're kidding.
Perhaps you read about it. Do these numbers become backward-looking because they don't reflect the new president's ideology, they reflect the last?
That seems to be the opinion of the market, which I think is a little dangerous in the sense that what if these numbers don't react immediately to the Trump presidency, and in that the implications of what he's going to put into work here, maybe the numbers don't respond.
So it's a scary world, and what you're saying is these numbers have to put up soon for us to have confidence.
They do, because I believe that's what the market's been trading on, this improvement in non-farm payrolls that we're going to talk about here, the improvement in GDP. If those numbers don't come through, how does the market react, Jim?
Okay, now before we dive into our trade discussion, I'd like to point out that with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as a trade recommendation. Prices and movements will vary in the markets. When we're doing this, the price of the underlying ES was about $22.74. Scott, that being said, what do you think?
That being said, talking about the numbers as we were and maybe being a little disappointed with this turnaround that hasn't happened yet, I'm expressing myself more bearishly. So obviously with the ES trading around $22.74 this morning, I look up and say, hey, what can I get for a put spread? So specifically, the $22.55, $22.75 put spread expires next Wednesday the 8th. We like giving the data some extra time to get digested in your ES contract. So it's going to cost you about 6 ticks or $300, which I think is a fair price. So the risk is the $300 that you pay to make the potential $700 on the full put spread, and you get a couple days for the data to be digested after the non-farm number.
What I like about this is that the skew is favorable to you, and that 2055 put is fairly expensive, so selling that seems good. I don't think these numbers have to be good yet, as long as the Trump presidency talks about some good regulatory policies for companies. So I'm looking at the same February 8th expiry, the 2290, 2295 call spread for 1 tick. Now, this trade risks the $50 you put up to make $200. So it's further away, but it's a bigger risk reward than yours. Thoughts?
Well, it's a bullish play, so obviously there's some disagreement we have there. I just look at these numbers and I think about that turnaround or this boost that some of this data needs to have. And when does the market realize that if we don't get it, what happens?
Okay, in a sentence, risk has been the theme over the last 2 weeks. The market shows some concern over President Trump's policies. Gold short term.
Gold I have been really watching closely because it's not acting like ES, it's not acting like ZN. So if you have it in your portfolio, the fact that it's not acting like those two major asset classes is a good reason to own it.
See, I worry about the Fed being a little more hawkish, talking about tightenings. Thank you for joining us in this special edition of Market Movers. I'm Jim Uriel, where we're helping to make you a better trader.